Hey, welcome back, traders. So we are going to talk about top-down analysis. One of my favorites. This is probably one of the sauces of our ingredients that we like to do when we're trading. So that's kind of a horrible analogy, but top-down analysis is a very popular trading strategy. All right. So just to give you a brief overview of what top-down analysis is, top-down analysis is simply when you are starting on the higher time frame and then you drill down to the lower time frame before you make your entry or your decision to do whatever you want to do in the market. So we're going to deep dive into this topic, and every time we trade, we want to do this because it will give us a big picture of what we need to do. So I can't wait to get into it. Let's get it. All right, guys, so here we are on the US 100, aka the NAS 100, aka the NASDAQ 100, and we're starting on the daily time frame. So number one is that we're starting on the daily time frame so that we can see the bigger picture. Now, why do we want to see the bigger picture? Because we want to see the direction we're headed. We want to see what trend we're in. Remember, I've talked to you guys several times in several different videos. It is safer and less riskier to trade with the trend. And in order to determine the trend, you need to go out to the higher time frame. Now, the higher time frame is all dependent on you and how you set your chart up. It can be the daily, it can be the weekly time frame like this, or even the monthly time frame. Now, remember, each candle represents a day on the daily time frame. Each candle represents a week on a weekly time frame. That means a week that has gone by, and so on and so forth. So let me start off with the daily here. Okay, each candle represents a day. This is all price action has been doing. Currently, price is at 18,349, and you can see it moving, going up and down. So what trend am I in just looking at this here? If I spread it out, also helps you to determine if you're in an uptrend or a downtrend. So you want to make sure you adjust your chart. If you have a Mac and you're on your keyboard, for example, have a mouse like this here, all I do is just kind of scroll up with my finger. If you have a wheel like on a PC or even on a Mac, depending on what you have, just scroll out, right? And as I scroll out, I can clearly see that I'm in an uptrend. See how it is just climbing up? I don't even need a trend line to show you that. Now, let's go to the 5-minute time frame and let's auto fit it. And I can't really see what trend I'm in, right? Remember, each candle now represents 5 minutes. You can say that I'm in an uptrend here. Just a few minutes ago, I was in a downtrend. You can't really see what's going on. It's just kind of a wavy line of uptrends, downtrends, uptrend, downtrend. But if you go to the daily time frame, and I scroll out, each candle represents a day. So that means for months and months and months, we've been in an uptrend. So, and then you can see how it comes back up. We were in a downtrend here, but then it continues to climb. So overall, we are clearly in an uptrend. And this is back in 2017. So it's safe to say that it is safer to buy than to sell because we have more forceful pushes to the upside, like this here, then minor pullbacks, forceful pushes to the upside, and then eventually we'll have minor pullbacks. So my whole point of explaining this to you is to show you that we need to figure out what trend we're in because it will help us to figure out how to trade. Now that I understand that I typically want to buy and something that continues to climb year after year, back in 2015 is still climbing, as long as the NASDAQ is doing good and these companies that are in there, I would love to buy all day. Now that I have the bigger picture, of my uptrend, I'm going to capture the last trend, right? So I don't have to draw my line here this way. I don't have to do that. I only need to capture the last bit of trend. So starting from this bottom to here, and I want to connect it. Now let's blow up our chart just a bit. And we're going to make this all clear here. So now we're only focusing on this piece. We don't need to focus on all of this here in the past. That's why I didn't draw my trend line from there. I'm only focusing on this piece here. Now that I understand that we're in an uptrend, I want to buy. Now, would I buy or would it make sense to buy where price is at now? Here's price. Now, when you drill down, this will help us determine if we should buy or not. Now, before I drill down, I typically want to buy at a higher low. We've talked about this. The ingredients of an uptrend is when you have higher highs and higher lows. So here's my higher high, here's my higher low. Here's my higher high, my higher low. Then we have a higher high, higher low. So all of the higher lows we want to buy. We just have to determine when are the higher lows coming, right? So the closer price gets to the trend line, if you draw your trend line correctly, the higher the opportunity that it is a higher low in which you would want to buy. Now that you have that in place, now you want to scroll down to the lower time frame to determine your buy levels. All right. So I wouldn't want to buy here when price is pretty much at the resistance level previously here. Okay. This was a higher high. So I don't want to buy at another higher high. I want to buy when price comes down. So this tells me price may want to continue higher to build another higher high here. And as price drops and fall, I'm looking at this point around this area here as my future support. So this is where I'm looking to buy, or even better, if it gets here. But oftentimes we don't know if it's going to touch the trend line, because remember, back in the day, back here, none of these higher lows touch the trend line except here. So the odds of it touching the trend line are slim, but at the same time, we want to make sure that if we're buying when price is at a discount. Here's our discount. The higher lows are the discount. So that way, if price happens to go against me, I know that it's more than likely wouldn't go any further than this trend line. And I don't mind that drawdown of a few dollars if I know price will eventually recover and head up past my entry and maybe even make a new higher high. Okay, so hopefully that makes sense, guys. Now that we understand that on the daily time frame, let's drill down. I'm going to clean up my chart here. All right, so now that I clean up my chart, I'm going to drill down. Now, there's no set rules as to what time frame I need to go down. It just all depends on what you see. So I know that this is a resistance zone. I'm going to go ahead and grab my rectangle, get these wicks here, and say this is my resistance zone. So now all of this price action down here is irrelevant. I already determined my higher highs and higher lows. This is irrelevant. Now you start to scroll in and then drop down to a lower time frame. Okay, let's go to the 8-hour time frame. Now each candle represents 8 hours. Okay, here's my higher low that I've drawn on the daily. I've recognized my higher high right here. And now here is where price is currently at right here. It's hovering around this here, where my previous higher high, also known as resistance, is at. Okay. So what I'm looking for to happen is either if price is going to break above my resistance or come back and retest this area here. If it comes back to retest this area here, I'm looking for a buy off the trend line around this area here, and I can exit at this resistance zone. If it doesn't go down and if price goes up higher, I'm still waiting. And then I want price to come down either to my previous resistance, which will also be my future support. And we talked about this here. Okay. If I see something like this, then I would be interested in buying at this level. Why is this level significant? Because this proved to me in the past that this area was significant to investors, to those who move the market, that this price was significant enough for it to drop. And now that it will finally break above resistance, it may come back and revisit this area. We see this time after time after time. And if I go back to the daily time frame and I look at my uptrend, all of these candles consist of a break and retest. This is a break and retest strategy. When price breaks above resistance, come back and retest our future support zone. Now that I see that on my 8-hour time frame, okay, the only reason why you would need to go to a lower time frame, like the 1 hour, 30-minute, 15-minute, or anything lower, is if price was exactly where you thought it would be, and then you're ready to execute. That's the only time you want to go down to a lower time frame. So what I mean by that is if price came down right here and it failed to break higher, and I'm like, yes, I love it. Now I'm going to buy. Then I would go down to the lower time frame, the hour, the 30-minute, whatever, just depending on what you see. And then I want to see price being oversold, meaning I may throw on an indicator like my Bollinger Bands. This band, if it's right here near my band, I say it's oversold. That may be a good indication to buy. Okay. I already know that it's oversold on the higher time frame, but I want to see that, or I want to see some sort of wick rejection or consolidation. If I see price moving sideways around here, and I know buyers and sellers are starting to negotiate and eventually is going to start to print higher, just as long as these companies in the NASDAQ are doing really good or pretty decent. Okay. You don't want to do this in a recession or during COVID-19 or anything like that where price is going to drop. And that's why fundamentals are really important. We'll talk about that in another video. So this is pretty much how you do top-down analysis. As you do that, then you want to start looking at the anatomy of the candle. You want to start going to the 15-minute time frame or the 30-minute time frame. And as you start to scroll down, now you can start seeing the behavior of people, literally the behavior of people. Because when you see small candles moving sideways, or if you see a large 15-minute candle start to move up like this, although it looks large on the 15-minute, when you go to the higher time frame, it's just a little wick. Okay. This tells me here in the 15-minute time frame that there are buyers starting to pick up, which you cannot see on the daily time frame. On the daily time frame, you may see a small little wick that's starting to grow on the opposite side of the candle. All right. Now, that's pretty much it when it comes to top-down analysis. You're actually starting on the higher time frame, discovering the trend you're in because it's safer and less riskier to trade with the trend. Once you discover your trend, you want to identify your levels, your support and resistance level. You have to get really good at identifying your levels because that is the key ingredient of entering and exiting properly. Once you find your support and resistance levels, then you go down to the lower time frame to start studying the anatomy of the candlestick. And when you start studying that anatomy of the candlestick, then you can start seeing the behaviors of buyers and sellers, which will then prompt you to entering into the market. Now, notice I didn't use any indicators unless it was for confluence. You only want to use indicators when you know that you know that you know your price action and your market structure is on point. So, guys, that's it. I want you guys to let me know if you have any questions in the chat. I'm there for you 24/7. But, guys, we're here to learn and educate you guys, not only in the Forex channel, but also with stocks, ETFs, and indices. If you haven't joined our free Discord, in the description below, we'll love to welcome you with open arms. You guys have a blessed day.